Alright, one of the most beloved railroad dividend stocks is Union Pacific stock ticker UNP. Its quality total return and also amazing dividend growth and share repurchase program over the last couple of years has made it beloved by dividend-focused investors. But recently, Union Pacific has hit some headwinds when it comes to their actual business, and we'll be talking all about that today. I'll be going over everything you need to know before you invest your hard-earned money into Union Pacific stock for the long term. And if you've been owning UNP, with all the money that you've been getting from your giant dividends, that means you should have enough to buy the new Dividend Stocks Not Drugs merchandise available in the description box. It's the best looking merchandise of any dividend channel, and I can personally say from experience, it feels very nice to wear. Thank you, and of course, roll the intro.
Hello, I like money.
I think to start off, I want to cover why the railroad industry is such a great investment for investors. To start off, it is extremely monopolistic. And yes, I understand as a consumer that may not be the best thing, but as an investor, we want to have monopolistic features in companies. It is simply impossible for a new player to come in today and start a railroad. There's just not enough land, tracks, or whatever. When you have a monopolistic business-like structure, that allows you to have pricing power, higher profits, and more consistency. That allows for a better return over the long term and better life for investors. Also, the software that I'm going to be using to show you all the data from today's video is dividenddata.com. If you want to help support the channel, get access to this awesome tool, use my link in the description box. It helps the channel out immensely. Thank you, and let's get into it. To start off, Union Pacific is currently trading at $240.31 per share. Currently, their CEO, which I will talk about today, is Jim Vena. Union Pacific is in the business of moving products. And now, a lot of people do not love that business just due to the unpredictability of it sometimes and how affected it is by prices and all that other stuff. But I would say that Union Pacific is different as it's a railroad company. With a company like UPS, there's a lot less predictability and a lot less stuff that they can control. Or in Union Pacific and other railroads, it's a bit different. Union Pacific ships grain products, fertilizers, foods, coal, and renewables, ethanol, and so much stuff that is essential for society to function basically. Now, unfortunately, they are still affected by the prices of these goods and products, but over the long term, it really hasn't seemed to be an issue for them. And we can just see by their earnings per share growth, over the long term, it really hasn't seemed to be much of an issue for them. Recently, their financials and margins have been impacted a little bit, and it's kind of been stagnant and a slow decline. Obviously, goods and the price of goods have been going up for a long time now, it seems, but Union Pacific has actually done really well throughout this tough time. UNP has 31,800 employees. Currently, when it comes to Union Pacific's dividend, they're trading at a 2.16% dividend yield and pay out $5.20 per share. They have a $146 billion market cap right now, and in 2022, they were the second largest railway company in the United States. And once again, I think really the factor that you cannot build a new railway today, and it's really just impossible to compete with them if you're a new player or even an existing one. It's just such a high barrier to entry business, and it's really not competable. This is a giant non-tangible asset that Union Pacific and other railway companies have, which make it so appealing for investors. Until a few years ago, I really didn't learn how the US relies on railways and how our country runs on the railroads. Alright, let's go over to dividenddata.com and move into all the financials that you need to know. To start off, I like to look at revenue. Now, revenue is a good sign to see in a company, but revenue does not mean anything if it does not equate to free cash flow. Currently, Union Pacific has been growing their revenue over the last 3 years at 9%, 5 years at 8.47%, and a 10-year growth rate at 6.09%. Very quality growth. So overall, even during these tougher economic conditions for them, they have been growing their revenue. But of course, that does not mean anything if it does not equate to free cash flow, which we will of course be looking at. Another very important metric in a business is margins. Currently, Union Pacific's gross margin is 43.01%, their operating margin is 36.64%, and their net margin is 25.72%. That's absolutely insane, and it just proves my point of the pricing power that they really have. Another thing that we do like to see also in our businesses is consistency when it comes to profitability. Now, when you want core positions and core holdings, you want consistent profitability. You don't want to be guessing quarter to quarter if your company is going to be profitable. Now, there are some companies like Target that you do kind of have a trade-off there with the inconsistency with the value, and it really just ranges from case to case. But when you're looking for core holdings like this, I think UNP has great profitability and consistency. I mentioned that we're going to go over the free cash flow, and here we are. Now, I will say this repeatedly on the channel. If you like your dividends, you like your share buybacks, dividends are the result of a company's free cash flow. Free cash flow is the most important metric when you're looking at a business's financials. So we could say with UNP's financials and their free cash flow, currently their free cash flow growth has been very quality. You could see in 2022 that it's been kind of stagnant, obviously due to the tougher economic conditions. Now, you would think that these results are very high quality in the first place, but Jim Vena, the new CEO who took over Lance Fritz's position, says that they can have even better profitability, even better free cash flow growth, and even better shareholder returns. That was a quote from the fund that actually called for Lance Fritz to resign from his position due to the lackluster returns, and I even thought these returns were fine. But it's absolutely insane to see that they have even more growth ahead of them with their new CEO, Jim Vena. They called for Jim Vena to be appointed as well, so it is a very positive thing to see. And recently, in the first quarter earnings, he did a very quality job during the circumstances that they're in. But currently, Union Pacific's free cash flow growth rate in the last 3 years has been 7.96%, their 5-year CAGR has been 13.13%, and their 10-year CAGR has been 13.67%. That's really, really high quality growth, and it's absolutely insane to think that there could be even more potential according to the fund and Jim Vena. Now, something that is not great when you look at a business is debt. Now, you gotta obviously take debt from different perspectives here. Currently, Union Pacific has $33 billion in debt, and it's been growing a little bit recently, but we also got to keep in mind this is a $140 billion market cap company and a very well-growing business. So overall, I would not say that this debt is really much of a concern for me. As we'll get to, it's not like their payout ratio is like 90 or 100% based off of free cash flow. Stock-based compensation is also something that can eat away at shareholder returns, and we can see that their stock-based compensation compared to their free cash flow is basically nothing. So another thing that checks out for Union Pacific when it comes to their financials. Alright, all you dividend investors, buckle your seatbelts. Alright, so dividend growth has been a little weird with this company. They haven't really grown the dividend since 2022, and I would assume this is mainly due to the macroeconomic conditions that they're going through right now. They just don't want to force a dividend hike that really isn't needed. They're already paying a really quality dividend growth rate, and they also had a 30% hike overall in the span of about 2 years. So over the long term, their dividend growth really will be fine. It's just in the short term, the consistency isn't always there, which is really no big issue at the end of the day. Currently, they have a 3-year dividend growth rate of 10.25%, a 5-year dividend growth rate of 10.2%, and a 10-year dividend growth rate of 12.65%. Very quality and sustainable dividend growth at the end of the day. Once again, though, dividends are the result of a company's free cash flow. If the free cash flow goes to shit, the dividend will go to shit. But looking at the payout ratio right now, based off of that free cash flow, it's only 55% of the free cash flow, which is very quality, and they usually linger around this range historically, so very positive things to see. Now, payout ratio off net income is the one that I don't pay as much attention to, simply because of accounting reasons, but currently their earnings per share payout ratio is 45.14% and also kind of lingers there in the 40 and 30% range. So, for right now, very sustainable dividend when it comes to Union Pacific, and I like where it's at. Share buybacks are also an amazing way for shareholders to get a return on their investment as well. Basically, over time, you get more equity in the company as the company buys back shares. And we could see recently they have been doing really, really aggressive share buybacks, possibly indicating to us that they think their stock is undervalued or fair price. So right now, very positive things to see. Maybe they're even allocating more money towards share buybacks instead of doing another dividend hike, which I'm absolutely fine with. A new tool that I'm absolutely in love with on dividenddata.com is the price ratios tab, which basically shows you the historical price to earnings ratio, price to free cash flow, and all this stuff when it comes to their valuation. We can see currently right now their forward PE is 20.28%, and looking historically, it looks like it's about fair price where they historically trade at. So that could be an indicator that Union Pacific is at around fair price right now. Their annual price to earnings chart has also took a decline since 2020, indicating that they could be on a potential dip, currently sitting at 18.43%. So, very interesting stuff right now when it comes to UNP and their valuation. But as I talk about, PE is not all. Looking at the price to free cash flow, which is another amazing metric to look at when it comes to valuation, they're also on a bit of a decline as well, currently sitting at 22.46. And we can see historically, over the last 3 years, they've ranged from 24 to 27 when it comes to their price to free cash flow ratio. It's also on a bit of a decline as well. So this could be an indicator that Union Pacific stock is a little undervalued or fair price right now. But once again, do your own DCF models and look at your own data. And lastly, we'd like to look at return on capital employed to indicate to us as a shareholder how effective the management is using their money to make more money for the business and really just make their business grow at the end of the day. And we can see currently the return on capital employed is 16.55% annualized, and we can see since 2010 they've been pretty much above 10% when that comes to the return on capital employed range. Very positive things to see at the end of the day though regardless. So financially, everything really checks out. They do use a bit of debt to leverage their business, so if you're uncomfortable with that, it may not be the best holding for you, but at the end of the day, it really hasn't been an issue for them over the long term. Overall, though, I think Union Pacific is an amazing business and an amazing industry. They're going to be around for decades, and I'm very confident of that. And they've historically had above average shareholder returns and market beating returns as well. Currently, UNP is one of the bigger positions in my portfolio, and I plan to continue building it up over the long term. I've been buying Union Pacific in the $238 to $240 range, and I will continue buying on dips. I'd like to make this a top 10 position in my portfolio sometime. I'm really bullish on what Jim Vena could potentially do for them and the new leadership that they have. Railways have been an industry that I've been learning a lot more about recently and will continue to do research on, but right now I'm very happy with my Union Pacific position. I want to thank you all for making it to the end of the video. It really means a lot to me deep down in my heart. If you appreciate this kind of content, make sure to smash the like button, subscribe, check out all my other stock analysis videos in the playlist below. I think these are some of my highest quality videos that I produce, and I learn a lot while doing them as well. Thank you guys so much for watching. Check out the merch link in the description, and do dividend stocks, not drugs. Have a good one.